Chris, can you hear me all right?
I can hear you.
Awesome. Hey, Sam. All right, well, let me introduce our first speaker, everyone. Online with us, we have Sam Bankman-Fried. He's become one of the most well-known faces and recognized names in crypto as the CEO of the exchange FTX and the trading firm Alameda Research. Before founding FTX, Sam was a trader on Jane Street Capital's international ETF desk. He traded a variety of ETFs, futures, currencies, and equities, and designed their automated OTC trading system. He graduated from MIT with a degree in physics. Welcome back, Sam.
Thanks.
So I'd love to jump right into it. You started FTX in 2019. So I was hoping you could bring us along on your journey, maybe tell the crowd what is FTX and what led you to create it.
Yeah, so FTX, it's a global cryptocurrency exchange. There's something like $2 billion, or sorry, $15 billion that trade daily on FTX as of now. And how did you get here? Well, I was at MIT and had just realized I did not want to become an academic, and I had no idea what I did want to do with my life. Started getting into effective altruism and thinking about how I could have the largest possible positive impact on the world, which led me to thinking about how I could donate as much money as I could to effective charities. I had some friends who had worked on Wall Street and enjoyed it, and so decided to try that out. So I interned at Jane Street Capital, a quant firm. After my junior year, liked it, ended up there, and I was working there, trading and donating most of what I made, and that's sort of what I thought I was going to end up doing with my life. It was an incredibly good position. I had a great time there. I learned a ton. Eventually, I sort of came to the conclusion that there were a lot of things I wanted to try doing with my life, and there was no way to do that without leaving. And so I left Jane Street in 2017, and I didn't know exactly what I would end up doing. Ended up getting into crypto because there was really good trading to do there at the time. And after a year or so of that, started up FTX.
Awesome. Well, I have a few EA questions for you at the end. But before that, could you tell us a little bit about what's important in an exchange, and maybe how did FTX differentiate itself early on, given that it started in 2019?
Yeah, so the core of an exchange is actually pretty simple. It's a matching engine. It's a place where people can submit bids and offers for an asset, and those will trade with each other. And that core piece of technology is actually not that complicated, all things considered. There are complicated parts when you start adding more onto it. And so now you can ask, well, what is FTX then, or what is a modern crypto exchange? If a exchange at its heart is a pretty simple concept. And the answer is it's a full stack financial product. And so on FTX, you do everything from deposit, fiat currencies or cryptocurrencies, to having the matching engine there where you can submit orders, account management there. It custodies the assets, clears them. It has a risk engine in the back, a compliance engine built out in-house. And so in the end, it's actually like everything that you need in order to complete a cryptocurrency trade. And in fact, in most trades in crypto, the only people involved are the buyer, the seller, and the exchange. And that is very different from what you see in traditional finance, where exchanges are just one piece of a much larger ecosystem, and that whole stack is actually split up between all of those different parties. The reason that ultimately, we ended up starting FTX, basically, we were really frustrated with the performance of the other exchanges, and it led us to think that there's a big opening in trying to build a new one, despite the fact that we were pretty late to the game, and that was going to make it really, really hard to acquire users. Hard enough that our guess was that we were going to fail.
Really interesting. So I know one of the one of the initial offerings of FTX was a heavy focus on derivatives, if I'm not wrong.
Yep.
I was hoping Ryan Miller was with us yesterday from FTX US, and he touched on a little bit that most of the derivatives trading happens outside the US. I know that FTX recently acquired LedgerX, which came with a few licenses, but that you guys are in the process of modifying those licenses. Can you tell us why?
Yeah, absolutely. So, right now, 95% of volume is outside of the US, and almost all futures volume is outside of the US. And the reason basically is that you need a license from the CFTC in order to offer futures in the US, and basically no one has that in the crypto ecosystem today. And so because of that, you see most of the volume, most of the liquidity going up offshore. LedgerX, now FTX US Derivatives, is a CFTC licensed derivatives exchange, which can, in theory, offer Bitcoin and Ethereum futures in the United States. However, right now, you can't offer any margin or leverage or financing on them, and so it's actually not that different from a spot contract. And the amendment that we have before the CFTC right now is to be able to offer leverage like every other major futures exchange does, and like we do internationally.
Awesome. So I want to jump to a little bit of kind of the macro perspective that you have on the cryptocurrency market. You at FTX have a really interesting and unique perspective because you see both the OTC side as well as the order book for a massive exchange. Could you tell us a little bit about maybe what is OTC and for those of us that may not know, and then kind of how did the asset classes evolve from your perspective?
Yeah, totally. So OTC trades are over-the-counter trades. Those are places where rather than going to an exchange and trading on an order book, people will basically contact either a market maker directly or some liquidity pool and ask for a quote on the trade that they ultimately want to do. And if that quote is good enough, then they'll do the trade. And it's something that tends to happen a lot more for sort of large size trades from institutions, whereas you tend to see order books used for smaller more standard trades. And I think that in crypto, most of the volume goes up lit, which is to say on exchanges. That is a little bit different from what you see in some other asset classes, where a lot of the volume is going up on various dark pool like venues or OTC venues. I think this is probably a good thing about the crypto ecosystem. I think it promotes cleaner, more transparent markets to have that. So anyway, that sort of is where most of it goes up. Over the last 3 years or so since we started FTX, the biggest change has been the massive increase in the amount of capital in crypto. You can see this in much more liquid order books, much higher volume, much more engagement, much more institutional engagement. And that has flowed through on the venture side, it's flowed through on the trading side, on the OTC side, on the liquidity side, and pretty much everything else.
Awesome. And because this is the MIT Bitcoin Expo, I guess a Bitcoin-focused question: what do you think the role of Bitcoin will ultimately serve in this space, over 5-10 years?
Yeah, so obviously I don't know for sure. All I can do is guess. But my best guess here is that Bitcoin is going to serve a role most similar to something like digital gold, which is to say that it's going to be effectively a store of value, a thing that especially internationally, people will hold, especially if they don't have access to other sort of good, safe stores of value, and less so as a means of payment itself, just given the capacity limitations of the Bitcoin network. Although you absolutely could see it, wrapped into other blockchains or onto Lightning or layer 2s or something like that, in order to be used for payments.
Okay, awesome. So moving a little bit away from financial applications, you had a really interesting Twitter thread on a decentralized Twitter. And Twitter's on our mind. We had Tess Rainerson here yesterday, the head of crypto at Twitter, and also with the acquisition of Twitter by Elon Musk. So I'm wondering if you can speak a little bit about what your thoughts are on the recent acquisition of Twitter by Elon, and maybe speak a little bit to what your vision for a decentralized Twitter would be and how it would solve current moderation challenges.
Totally. So, obviously we'll see what happens, but I'm potentially pretty excited for what could happen there. I think it's very much a company that was in need of some, reinvigoration, and hopefully this will be, enough to help provide that. I think it's a company where, there was not enough, there's not enough innovation coming, and where they're having serious issues with, for instance, moderation, and at the same time having pretty significant cost overruns. And my sense for what would make sense here would be something like the following. You could put the actual underlying social media messages on a blockchain, and the advantage of the underlying tweets, and the advantage of doing this is, I actually think there are a few different advantages. One of them is that it creates composability between social media networks, which is missing today, and I think is actually a pretty big problem. So right now, if you tweet and someone else is using Facebook, they can't see what you said. And similarly, if you're on Facebook and they're using WhatsApp, they can't see what you said. And that's kind of dumb. It's a bad user experience. It means we all have to have 30 different apps. It also means that there are gigantic moats getting in the way of new entrants coming into the space. Because if you wanted to, if your goal were to start up, your own social media network, it wouldn't have users, it wouldn't have messages. If you put the actual messages on a blockchain, then any social media network could read from those messages, and they wouldn't be gated and restricted just to the social media network that they were originally entered on, which would give a ton of flexibility and I think a ton of power. And it would mean that users could have a much more coherent, consistent experience. It means that if you want to start up your own social media network, you could compose with the existing blockchain layer for messages without having to worry about the network effect buildup. And so I think it'd be healthy from a competitive perspective and from user experience perspective. It would also let you have different experiences on different portals without losing that network effect. And so, you could have, you could imagine having, different moderation standards, for instance, on different front ends that all compose with that same underlying set of messages. So anyway, I think it'd be pretty cool. And I don't know if it's actually something Elon's going to do, but I do think that there would be significant advantages to it.
I think in the thread you said something like, if there's a need, we'll help make it happen. How would you help make it happen?
Yeah, I mean, I think we would be super happy to help build out the actual infrastructure for it, and so building out the the protocols for posting them on blockchains, and building out connectivity with hosted sites, and in general be happy to run build out or run the whole blockchain based piece of that.
Awesome. All right, jumping to my questions on EA and the FTX Future Fund. I was hoping you could tell us a little bit about what the FTX Future Fund is first, and what sort of initiatives within that fund you're most excited about.
Yeah, I mean, there are a lot of things that we're excited about, and it's somewhat intentionally taking a pretty broad view of what it could be, which I'm excited by as well. But I think some of the things we're seeing first, we're seeing a lot of regranting based funding, and so some of this is finding people who have a track record of doing great work and giving them smaller pots of money to donate. Some of this is going towards pandemic preparedness and prevention, which I think is sorely needed. Some of this is going towards, effective altruism movement building. Some of this is going towards AI safety organizations. Some of it's going to global health and poverty or animal welfare organizations. There are little bits going to a lot of different places. And I think we very much see this as a sort of like building out and trial phase for it, where ultimately we'll end up, sizing up the things that we think are doing best. But, we think we're probably going to do, I think we've already done, frankly, about 100 million this year so far of donations, and, looking to do more over the rest of the year. So, hopefully can get pretty big, hopefully can have a lot of positive impact.
Great. So as you know, there's a big EA community kind of across MIT, across Harvard. So I spoke to a few of those people and collected 2 questions for you from kind of the general EA community. The first one is, what are some of the things that the EA community should do differently?
I mean, I think they should be way more ambitious. I think that, there are ways to have massively outsized impact, and doing that is just worth so much that it's really worth prioritizing. And so I think that, whether that's thinking about ambitious ways to potentially be able to donate a huge amount of money, whether that's looking at projects that might be able to scale very large if they're doing well, whether that's looking at just scaling up a granting organization to be able to do significant size. I think we've been undershooting. I think there are lots of signs we've been undershooting. I think we've been donating hundreds of millions of dollars a year as a community to things that most of the people doing those donations, I think, don't think are the best things out there, because there hasn't been enough scaling in other areas. And I think that most of all, we should be willing to risk failure. If you're not willing to risk failure, you're just not going to get the biggest upside pieces. And you can try and think about what you think these probability distributions look like. If you think they're very skewed, which I kind of think they do, probably the best strategy has a pretty significant chance of failure, and that's okay. Especially as an individual, because what matters is aggregate impact. And, you're not trying to guarantee that you personally have at least some amount of impact. You're trying to maximize the impact of the community, and that is somewhat different. And I think it pushes much more in the direction of, of making sure that that you're thinking about the expected value and the upside, rather than making sure that you have at least some fixed level of impact.
And then following up on that, related to failure, do you think there are some problems that EA cannot solve?
I mean, cannot is a strong word. Maybe should not be focusing on right now. Absolutely. I think that, in theory, right, EA's goal is to do whatever has the largest impact. And so, in theory, it should be willing to take on whatever is important here, and, without restrictions. But, again, empirically, there are things that probably aren't that thing. And so I think that you see that somewhat in the patterns that it has had. But that, I think one reason, for instance, that, EA has focused less on climate change than a lot of the world has, is that I think there's been a perception of a lack of sort of effective, efficient scaling approaches to it. Now, I'm not sure that that's necessarily correct. And I think you could reasonably argue that maybe EA's been underestimating how much it could do in fighting climate change. Maybe there are ambitious projects that could have really massive impact on it at a relatively tractable cost. And if so, that it would make sense to prioritize. And I think, frankly, that things like that have generally been underdone in EA, taking something which is sort of viewed for whatever reason as not super tractable, and seeing whether we're actually thinking ambitiously about it, or whether we're thinking, well, is it effective to take all our money and put into carbon offsets? Probably not. That's just not going to be the best thing. In fact, anything that you've heard of and is well funded is not going to be the best thing. There's $1 trillion right now trying to fight climate change. right? So if you're putting it at the same things that they are, those are not going to be nearly as neglected. But that doesn't mean that there aren't some really effective strategies. And like, to give one example of this, and this is sort of the opposite of your question, right? But like, even within a realm that I think traditionally, EA has been less active in, I would be really excited to see someone do an actually deep, really principled dive on geoengineering. And, whether there are really, really powerful things that can be done there to fight climate change. And, I think there's sort of probably a few other types of interventions that have some chance of being massively valuable, and take some amount of creativity and sort of going out on a limb, but absolutely should be done. So, even within the places that, that sort of like traditionally EA has avoided, I still think that like, it's not obvious that the movement has been making the right choice in that.
Before we jump back to a few more crypto related questions, what's the most ambitious project in the FTX Future Fund currently? Well, there are a lot of really ambitious projects that we've put out requests for. And I think that like, you can read the website and see a lot of, a lot of things on a lot of scales. Like right now, in terms of things that have been actively deployed, I think the most ambitious one is the Regranter program, which is it's sort of a bullshit answer because that's actually like a collection of projects. But it's basically saying like that we're going to be giving upwards of 100 million this year to a lot of members of the community to give to where they think is most needed and most effective. And one thing that I really like about this vision, and one reason that I think we're sort of like drawn to it, is that it potentially gets large scale of really efficient opportunities that are hard to scale. And what I mean by this is that there's a lot of micro opportunities in the community that a ton of people notice. And you'll see all over the place and be like, oh boy, like if like this group had an extra $5,000, they could actually do something really great right now. They don't have it. And like, could they go apply to, OpenPhil or to Future Fund or something like that for a grant? They could. If it's going to be a $5,000 grant, it's like, it's going to be an enormous amount of hassle for that. But if someone who's sort of related to that group is a regranter, then that changes the equation here and makes it so that, they can potentially, come and fill that gap, in a really efficient way. And in theory, this could be scaled to the point where actually, what you end up with is really like a lot of pretty compelling opportunities for, adding up 1,000 of those opportunities to create 5 million of incredibly effective giving, and having a distribution mechanism that could plausibly scale that out. Awesome. Well, that's a great segue. It sounds like distribution of capital is important in access to financial services. So if we jump to DeFi real quick from EA, I would love for you to tell us a little bit about the work that FTX has done on Serum. And then I'd love to hear your perspective on kind of the coexistence of centralized exchanges and decentralized exchanges.
So, what is Serum? It's a decentralized exchange on Solana blockchain. And the theory was actually creating an exchange on chain, so a real DEX with an order book. And that sort of hadn't been done before. We'd seen DEXs and we'd seen centralized exchanges with order books. We basically hadn't seen a DEX with an order book. And I think order books are generally like the most effective and efficient form of trading. And so I think there's a ton of value in this. In terms of centralized versus decentralized exchanges, there are some things that are just never going to make sense in the context of a decentralized exchange. They are, among other things, they're just not the most computationally efficient things. Like it is, an unfortunate property of them that they take at least thousands of times as much compute. Latency is not going to get below 100 milliseconds probably. And this isn't fatal. It is fatal though for some things. It is fatal for some applications. And that's at its core, the way I think about it is like, well, you know, it's that's totally fine from the perspective of someone swiping right on a retail app, right? Because that is something that like is not particularly, you know, time sensitive. It's not particularly, you know, latency sensitive. And so it's totally fine to have that, you know, on significant lag, meaning 100 milliseconds of lag. That doesn't ruin the experience at all. When you have two high frequency trading firms that are trading with each other, like that, they're not going to want to pay a 20th of a penny and eat a 150 millisecond lag on the trade. And so I basically think that there's just like some cases that it doesn't make sense for. But if you ignore those and just focus on the cases where it might make sense, you know, I then think you know, that there are compelling reasons to at least try to put things on the blockchain. I think that like, you know, it creates this sort of modular, you know, composable Lego brick style of building, which can be super powerful.
Very interesting. So I was hoping you could dig in a little bit to the role of arbitrage in DeFi, and I guess, do you think it's good?
Okay, arbitrage, and do I think it's good? I basically think that there are good and bad parts of it, but that at the end of the day, when all is said and done, your prior should probably be that it's good. And the reason I say this is that you know, what is arbitrage? It's, you know, buying low, selling high at the same time, making money doing it. By doing arbitrage, you know, let's say that, and I'll take maybe a more extreme case. One of the biggest trades that I ever did was a arb in Japan, where Japanese Bitcoins were trading a whole lot higher than American Bitcoins. They were trading about 10% higher. And the trade there, which was a pretty straightforward trade, was you know, buying Bitcoins in you know, buying Bitcoins in America, sending them to Japan, selling there, and you know, making money doing that. One of the consequences of doing that, one of the advantages of doing that for markets is, well, you have all these people in Japan trying to buy Bitcoins, getting a really bad price for it, right? And in fact, probably they just like can't buy more. Because if they did, there just like wouldn't be any sellers there eventually, right? Or the price would get so dislocated, it would be absurd. And in general, that's like a breakdown of efficient markets, right? Like there are buyers and sellers who are trying to meet up and they're failing to, and that's going to stop trades from happening, or at least stop them from happening at reasonable prices. And so what can you do about that? Well, if you have an arbitrage firm come in there, it will bring those prices together and it will transport that liquidity from the United States to Japan. And in doing so, you know, make markets more efficient, more liquid, and, you know, probably in the end, you know, end up helping out the consumer. And so that, anyway, that's sort of my prior on it. You know, if you don't have a particular reason to think in a particular case that, you know, it would be good or bad. And so that's where I start coming from. And, you know, that's, I think, where I end up in most cases, unless there's sort of like some reason that it's, you know, particularly predatory or something like that in a particular case, that like this is a dumb arb that like, you know, was created by the person who's doing the arb or something like that. Like, you know, there was not a liquidity hole until someone created the liquidity hole in order to get to fill it. But as long as you don't have a case like that, then in general, I think it's, you know, positive for the world for arbs to be done.
There's an awesome video of you at Alameda on YouTube, I think from maybe 2019, kind of
Yep.
The behind the scenes of doing one of these big trades. So if anyone in the crowd is interested in seeing kind of behind the scenes at Alameda, check it out on YouTube. There's we have 1 more minute, so I have one final question for you. You know, for those that are just entering the ecosystem or have been here for a while, is there one kind of tangible product or tool, protocol that you have used recently that you'd recommend that the audience go and try out?
Oh, interesting question. I would say I mean, in general, if you're excited to learn more about the ecosystem, the easiest way is to use things. Like way better than reading about them is like put $10 in, right? Like put in something that you absolutely don't mind losing, and just click around and see what happens. I would say the core things, absolutely use the top 5 blockchains, right? On each of the top 5 blockchains, try to like, do the basic shit, right? And see what happens, right? Try like getting a wallet and like sending things on the blockchain and seeing what happens, and going through a centralized exchange, using their DEXs, their borrow lending protocols. Definitely try at least one DEX and at least one borrow lending protocol, because those are really central, primitives in DeFi. It matters less which one that you use than that you use at least one of each, to get to know them, see how they work. I think that's like really the core things that I would say. And then I think like it's maybe instructive to check out a few of the DeFi games. Not because I think you're going to have a great time playing them, because I think you're not going to have a great time playing them. And I think it will teach you something about why DeFi gaming hasn't gone mainstream yet.
Well, Sam, I think that's all we have time for. I just want to thank you so much for joining us today. And
of course.
Awesome. Happy Mother's Day.
You too.
All right. See ya.